Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. I'm your host, Chris Ressa, and I'm excited to be joined today by Dana Telsey, the owner and founder of the Telsey Advisory Group. Welcome to the show, Dana.
Thank you so much for having me, Chris. Great to be here, especially on Thanksgiving week.
Yes. So, Dana, why don't you tell everyone a little bit more about who you are and what you do?
Sure. I've been involved in the retail world for many, many years. I started off as a retail research analyst at an asset management firm, Ron Barron's firm, Barron Capital. I was there for 7 years and then went to the sell side, CJ Lawrence, and I ran the retail group at Bear Stearns for 12 years. We're number one team on the street. And 19 years ago, I founded Telsey Advisory Group, and we're a consumer-focused research bank following over 100 companies in all of the consumer landscape. We have a banking arm and consulting arm attached to that. We're the retail real estate community we're very involved with. And then we have an asset management arm, a consumer hedge fund that's been around for around 8 years, beating its benchmark. So if it has to do with consumer, that's what I'm all about. And I can't wait till Friday because I'm still a feet on the street girl who basically likes to hit the stores in addition to hitting the web.
Where are you going to hit on Friday?
Oh, so I'll be in Manhattan, I'll be in New Jersey, whether it's Garden State or others, and then if I can make it out to Long Island at the same time, I will do that also.
Awesome. And so I'll start with fun. Let's start with fun stuff. What are the trends this year for product? What are the product trends this year?
You know, it's interesting. We have a lot of new footwear trends this year. When you think about Birkenstock and the closed-toed shoe, when you think about Hoka and On just opened a new store in Flatiron on 21st and 5th, super popular. When you think about the UGG boots, they seem to be working. And let's also talk about bottoms and pants. You're seeing about wide leg that's been very popular, and it's creating the need for new tops and for new shoes. So it is popular. We're seeing a little bit of a rebirth, what we're seeing in terms of the cosmetics area, where we're seeing new product innovation, particularly driving demand for fragrances. So I've got newness, and you have to have innovation and value in order to get the consumer to make a sale. What's been slower? Luxury goods has been slower. It's been slower almost across the board. We've seen it from some of the big companies in terms of their numbers, and we've seen it because of the change in trends out there. And design talent means everything, whether it's the newness that's needed at Gucci or at Burberry. There's newness that's needed in order to drive that conversion.
Got it. On the things that are on trend, is there a specific product that you think people are going to be in lines for and like really go wild for?
Well, look at the new Telfar store opened in Soho earlier last week, and there were lines around the block. So that certainly is a trend that's out there that is very meaningful in terms of driving demand. And I think for other items where we're going to see big demand, a lot of this is experiences. You have the last Taylor Swift concerts that are out there. But you know what's happening? And I think the outlook for 2025 in a way, it's the letter S. Service and socialization. You're hearing about all these new ways, whether it's parties, whether it's new clubs out there that are taking up more of people's time because they want to socialize together, whether it's for food or entertainment. That's what matters, and I'm seeing a lot of that.
So that's interesting. How are you seeing that?
Couple different ways. I think on the socialization, look at the events and the collaborations that companies are doing. I mean, you just saw it yesterday with Lululemon and Disney with the new collaboration, Bath and Body Works and Emily in Paris. Look at what LV has done on 57th and 5th. If you haven't seen the 7 trunks that go up almost into the sky, locals and tourists are taking pictures. So what's the wow effect that's going to drive people to be outside? And I think those are some of the things that I'm noticing that make a difference.
I love it. Thank you for that recap on trends and the 2 S's.
Mm-hmm.
We'll start at the end of the movie. Are holiday sales going to be up from last year?
I think holiday sales will be up from last year. I think it'll be 3 to 3.5%. I think it'll be respectable. It's certainly not going to reach last year's levels of just under 5%. I don't know about you, but my inbox has been flooded whether it's online, whether it's on my phone, with tons of promotions. It started in September when Best Buy talked about the holiday in September. It followed with Amazon, Target, and Walmart in October. And with 5 fewer days between Thanksgiving and Christmas this year, consumers have to get out earlier because guess what? The promotional button is definitely being pushed and people are getting deals earlier. We know that everyone is always a procrastinator. The 10 days before Christmas always means the most, but they're offering promotions earlier and it feels like more extensively than they did last year.
Are are margins going to be hit worse than other holiday seasons?
I think certainly margins can be hit worse than last year or the year before, but I think it's planned for. When you look at the inventory levels relative to sales, inventory levels are still pretty clean. And I think some of the promotions have been built in, but I think retailers are pretty agile and they're going to react if they need to because they don't want to sit with more goods at the end of the holiday season.
We've learned that lesson.
Hmm.
We've learned that lesson. But, you know, coming out of COVID, retailers didn't have to discount at all.
No. And there wasn't enough inventory coming out of COVID. Now they can get the inventory. Some of them, you're hearing obviously about tariffs, given how important China is for some. They're looking to bring in goods earlier if we do have that impact of tariffs down the line. But as of now, I think the benefit is going to be somewhat on if you can look at top line and marketing spend. The activation of marketing is helping, and I think that's where we're seeing the bigger increase. Most really retailers are increasing their marketing spend because it is driving demand and conversion.
Wow. You know, that's something you don't hear often, that marketing
Mhm.
spend is driving conversion.
Yep.
Uh,
You look at that marketing spend, and a lot of it is social media, and that has been very influential. You look at influencers who have more importance today in driving global reach than they've ever had before. It's not what Vogue magazine was in the past. Today it's about influencers. And influencers are regular people in addition to being those that are very well followed.
totally. So that was the end of the movie of this year. Now Black Friday. How is this Friday going to be?
I think this Friday should be busy. I mean, in the Northeast, luckily the rain's on Thanksgiving Day Thursday, not on Friday. I think it'll be busy, but if anything, it's not like what Black Fridays were because the deals happen before, after, and even during. So I think you get the rush in the morning, and then does it slow down? Like we said before, that S of socialization matters. I think you're seeing even the store hours of retailers for Black Friday weekend. It's not the midnight store hours or the 5 a.m. openings like it had been in the past. You're talking more normalized hours like 9 a.m., 10 a.m., and 11 a.m.
Totally. And so let's say you're right, and somewhere within a standard deviation, we're in this like what I'll call as expected holiday spend.
Hmm.
What does that mean for 25?
I think overall for 2025, you have a couple of headwinds and tailwinds. When I think of the wealth effect out there, I mean, look what happened right after the election. The S&P 500 rose 2.5% the day after the election. If we see a wealth effect that continues to drive the stock market, that's going to lead consumers basically to feel freer with their spending. You look at tax cuts. Tax cuts could boost consumers' wallets. And with those tax cuts, what it could mean is even more consumer spending. While the headwinds definitely are what tariffs can do, because one of the things we know with consumers, price matters. Price on essentials, price on essential goods. Look what's happening with Walmart, where their biggest share is coming from gaining share of some more higher income customers. And it's been said that the impact of tariffs on goods from China, particularly for apparel, could it impact by nearly $80 billion in consumer spend and require a double digit price increase? That's certainly going to lead to more moderation than we've had in the past. And you look at deportation, if that does hit, then that also is a headwind and basically could impact some of the spend too. and if the Fed loses independence is a concern. But overall, when I think about 2025, it is incumbent upon retailers and brands to continue to drive newness in their assortment in order to push consumers to spend. I think we'll continue to have an apparel cycle. I think we're going to continue to have a footwear cycle. And I think it takes luxury a while to come back.
So I'm going to give you a prediction of mine for
Sure,
2025. Tell
please.
me if I'm way off. You know better than me. So it comes from a real estate background.
Hmm.
There are less spaces for retailers to go into,
More demand than supply.
and the capital markets should be uh, improved from what they were, and we're going to have potentially some deregulation from a new administration.
Hmm.
And so I believe those three things sets the stage for more M&A activity in the retailer space.
Yes, more M&A would certainly be a positive. We've seen obviously what just happened with Tapestry and Capri.
Crazy.
Yep. And there's more new companies that are starting. There's excitement in newer companies. Look at Skims. Skims supposedly going to open up to 25 new stores next year. There's a lot of excitement about what Skims is doing. And while you have other new brands that are out there that are also exciting, contemporary apparel brands like L'Agence that's opening stores. And you have even companies, for example, like the Zaras of the world, who are accelerating their rate of new store openings in the US. Yes, we have some exciting things that could be there. And we're watching carefully to see that their pricing and the demand for their goods is continuing to work. I think the other one that's going to work this holiday season where you're seeing demand, look at Abercrombie and Fitch. Whether what they've done with the NFL, what they've done with the wedding shops, they have a new customer, not just for Abercrombie, but they're expanding their Hollister customer.
Got it. Um, so that's a big picture global stuff. Curious a little bit more on Dana. What surprised you this year?
The number of CEO changes, the number of CEO changes that we've had in the consumer space, it's been extensive. When Jim Conroy leaves Boot Barn to go become the CEO of Ross Stores, when Hillary Super, who had been at many different specialty apparel retailers, leaves Savage times Fenty to go to Victoria's Secret. So the number of CEO changes has been more dramatic than we've seen in the past, which says two things. Businesses need a refresh, and I've always had this theme of retail is a roller coaster. You need to remodel, reinvent, and remerchandise in order to be at the top, and it seems like that's happening.
You know, one of the things that I think it also means is I think it means that people think that leadership makes an impact on the retail space.
Hmm.
And it's not only the product, it's not only the supply chain, it's the actual leadership team can make an impact. Otherwise, they would leave leadership in place. And given we've had a significant amount of change in leadership in retail, I think that's telling to the views of what leadership can do on retail and what management teams can do.
Yep, I've always believed that teamwork makes the dream work. And one of the areas, I mean, you think about off price. Overall, you look at a company like TJX, which basically it's been internal succession plans and promoting from within the ladder. It's interesting that Ross Stores went outside in order to bring in a new leader.
It totally is. I'm interested to see what changes he might bring to the to Ross for sure.
Right. And look at Five Below. They're still searching for a new leader.
Yeah, for sure. That's true. Um, in what is your biggest concern right now in the retail space?
My biggest concern over is obviously the state of the consumer and how much they can afford. Yes, inflation is moderating, but the shift that we've seen with essentials and that shift to essentials, you still have a consumer that's very selective and discerning and cautious in how they're spending. I think overall, when you think about there's more there's more stability in how companies are redoing their expense structure than there is in the top line. So the top line to me is what I'm focused on as we go through 2025, what companies are going to do to activate that consumer who has been more cautious.
One of the things that I think is interesting about shift in spend is the continued increase in spend on food and beverage away from home.
Hmm.
And one of the reasons that I believe that consumers spend on essentials has gone up is because the cost, what Americans are spending today on food and beverage, I think is up, don't quote me, but it's up like 4 points over what it was pre-pandemic. And
Hmm.
the acceleration of the spend at restaurants is just extraordinary. So for me, I'm a little concerned on food and beverage. Last year, I think we had over 53,000 new restaurants open in America.
Wow.
Something, it was some extraordinary number.
Hmm.
And and this is a business that's obviously challenging to be successful at. We all know the failure rate of
Right.
especially first time restaurants. But I wonder what would happen if some of that spend back into went away from the restaurants and went back into what I would consider more essential food items.
Hmm.
But we're just spending more on food because groceries up as well. Grocery spend is up,
Right.
restaurant spend is up. So I guess to wrap this up in a not so pretty bow, I keep wondering how much is we're moving to essentials or we just want to spend more on food, whether it's because of the experience or because of inflation in food or whatever it might have been, but we're spending more on food.
Right, and the prices of food, the prices of it has gone up. You've seen, look what Walmart is, over 60% of their business is now food. That's become important. But I think the other thing is look at hybrid work. Well, a lot of companies have gone back 3 or 4 days, some 5 days. Look at your centers. Overall, the activation of customers and shoppers, even during midday, going out and going to those restaurants is higher. If that spend were to shift, it would have to go back to some goods and some of the services that are out there. You look at, frankly, new entertainment items and new entertainment spaces that are gaining some share too.
Yeah. So, and my, I think that some of these businesses,
Hmm.
some of their competition is not what it used to be. I think, I might not be selling the same product, but I think some of these businesses, their competition is food.
Right. I think I totally agree. It's where consumers spend time because what everyone's in the market for is how do you get more of that shopper's time?
Yeah. Um, if if sales were up 1%, would the
Mhm.
market would the market be lose its mind
For what time period? For holiday?
for holiday?
That would be disappointing. That would definitely be a disappointing number. It would mean there had to have been more promotions in order to drive demand. That would impact the outlook for 2025 also, because it would mean a broader swath of consumers would be slowing their spending.
Okay,
I think that would be also be out of sync with what many of the brands and retailers are looking for also.
got it. What are people telling you and brands telling you and companies telling you that they're going to be doing in 2025?
Oh, frankly, I think there is much more focus on the data that they're learning and how they're applying it. I think the marketing initiatives and the marketing spend will continue to be differentiated. I think it'll continue to increase. The focus on remodeling stores is still big. Look what's opening tomorrow. The Aritzia store is opening in Soho, and guess what? It will be open on Thanksgiving Day, and I will be there. The new Aritzia store is opening in Soho, so I think these remodels are a big deal. You look at what Victoria's Secret is probably going to do to retail, is going to do to their stores with Hillary's impact on what she's going to see. So I'm seeing a increased focus on the investment in the store to drive demand, and also the investment in the store as the sales associates and building the relationships. I think the loyalty impacts of the consumer and how what those loyalty memberships is bringing. is different today than in the past. I think also full-time sales associates. You look at full-time sales associates, part of the reason why holiday hiring isn't as great this year as it was in years past is because more retailers are giving more hours to some of the existing associates because they know the product better.
Got it. Let's pivot to some sectors. You guys cover over 100
We cover a
companies.
lot of sectors. Yep.
You cover a lot of sectors. So I'll use a vague word. What's been interesting to you from a sector perspective, outside of just luxury value, but like specific sectors?
Home. You look at the home sector. Is that a sector that in 2025 we're going to see a pickup in the home sector with the continuation of interest rate cuts? Will that be an opportunity? You look at Williams Sonoma that just did a little bit better than expected, still negative, but better than expected. And if the flurry of interest rate cuts, is that going to help the home sector? I think that's going to be certainly very, very interesting to watch. I think obviously on the whole apparel sector, what you're seeing in apparel and frankly, new private brands beginning to gain traction and opening more stores, like what you're seeing with Skims. And frankly, I think there's other new players out there. You look at Uniqlo, who just brought their lower price concept to the US, or you look at H&M, who just opened their more tech-enabled store in Times Square. I think the new ways that these physical retailers are interacting is going to be key. I think that we still have, what is the department store of the future going to look like? How many will there be? I still think that's an uncertainty. That's a question mark out there going forward. I think the other thing that's going to be interesting is on the discounters. The discounters continuing to take more share in multiple categories is different than we've had in the past.
Got it. That was super interesting. Yeah,
And
home.
you know what else? The retreads. How we talk about CEO changes. Well, look at Elliott, who came to Nike. Are some of these brands that had been weak, can they regain their luster?
For sure. Um, I'm pretty confident in 25. Home, I'm not sure if we get the pickup that some would like in home with interest rates. I think that category will need some new product to
Definitely.
really drive people to spend, since they spent so much in the past few years. It's going to have to be something super compelling.
And also home goods just keeps taking share.
They keep taking share. They're amazing. They keep
Hmm.
taking share. This has been great. Any last tidbits that people should think about or know as we get into the holiday season and into 25?
As you think about the holiday season and going into 2025, I think overall, and when we think about sales and when we think about sales growth, are we going to see, like you mentioned, any positive surprises in the first half of the year because of the marketing activations from brands that are going on? Are we going to see the impact, frankly, of buy online, pick up in store becoming even sharper and helping to drive more traffic to stores? And are we going to see overall the M&A or other capital markets activities drive some more excitement?
So you've mentioned marketing and marketing activation a lot
All
on
of the
this
time.
call.
Yes.
Yes. So I haven't followed. How much is marketing spend up?
Oh, for some of them, it's double digits. You look at the TikTok stores, you look at Amazon and some of their shop and shops that they have for some of the brands. It's been an investment and it's driven awareness. And you're having consumer goods companies increase their marketing spend. That's been a difference. And so it's
And
double digits for many of them.
and you think that's going to continue to grow because they're thinking it's working.
They're thinking it's working. And also they're looking at that marketing expense as a full price driver, not just a promotional lever.
Interesting. Is the physical store a marketing expense in your opinion?
No, it's based. I think the physical store. It's not necessarily marketing. It's sales, and you need You need the physical store for both the online channel and you need it for the physical channel, and it's a profit maker. It's not a profit hindrance.
Mic drop. Let's we can end on that. Dana, this has been fantastic. I really appreciate the time. Thank you so much.
Thank you. Have a great holiday.
You too. Appreciate you watching. Hit subscribe. See you in the next one.